Alright guys, in today's video I'm going to start by walking you through a price action slash VWAP trade, and then we will move on to the second trade. And now VWAP, which as you already know stands for volume weighted average price, is basically an indicator that shows the average price a security has traded at during the market's regular hours, factoring in both volume and price. The way how this indicator calculates this is by adding up the dollar amount traded for each transaction, price times volume, and then dividing by the total shares traded. This results in a weighted average where higher volume trades have a greater impact on the VWAP. Now, using VWAP is straightforward. If the price is continually above the VWAP, it's a bullish signal indicating market strength. If the price is below, it's a bearish signal suggesting market weakness. Also, the gap between the price and the VWAP line can show how strong the current trend is, or hint at least at a possible mean reversion. For example, in this setup here, before I took the trade, you can see the market consistently stayed clean above the VWAP throughout most of the trading session. Even this brief test slightly below it was immediately bought up, which means this entire uptrend move followed by an accumulation phase is clearly supported by the VWAP, indicating, relatively speaking, obviously, indicating the market's short-term bullish bias. Now, the reason I said relatively speaking is because you can't just long the market at any point just because the price trades above VWAP. You need confluence and confirmation before making a move. Keep in mind, guys, VWAP is a useful filter, but it's just an indicator and not foolproof. Prices often oscillate or move around the VWAP, and it doesn't always contain them, which is why risk management is crucial. For instance, again, in this section of the chart, you can see that the price was sidewaying with no clear direction. However, the first indication of a shift towards a bearish bias was, in my view, when the VWAP started testing, as already mentioned, started testing this point over here. Now, if you look closely, this VWAP test below support resulted in a lower high here, which contributed to the formation of this descending trend line, a pattern typically considered bearish. The market then pulls back as it breaks convincingly, I should say, below the VWAP, and the base of the sideways channel retraces suddenly above as it manipulates its sentiment. But notice how the market still respects here this resistance line, maintaining its bearish tendencies via another impulsive VWAP breach. Now, as this pattern continues, we see a sequence of lower highs and lower lows, which sets the price into a clear falling channel model. I think that these oscillations around the VWAP can be useful as a confluence factor when determining your directional bias. They can certainly offer some solid clues into possible shifts in market sentiment. For example, in this trade, especially after this shift below the 66 level, my overall bias remained bearish for two main reasons. First, from a price action perspective, we have this strong expansion after reversing, where price rebalances this imbalance zone while forming a buy rate. Clearly, the buy rate element here is another factor that contributes to the price shifting direction to the downside. Secondly, just like in these instances, the price breaks below the previous bar and the VWAP. Now, all of these are technical elements suggesting, with obviously a certain degree of high probability, that we might see a move lower, which is why the 55.78 is the level where I actually got my contracts after missing the initial rebalance zone field. I also added another contract once we dipped below the 74 level as the price continued trading below VWAP. And as you can see, I closed this short position profitably while targeting the lows. All right, let's now move on to the second trade and go into exactly why I took it. So looking at the 5-minute ES chart with the price settling off for several hours here, I'm starting to spot a potential setup. Now, why do I say this? Well, the retracement of this brief bounce below the 27 level might indicate a short-term bottom for this range. My thinking is that this could act as a catalyst for an upward move with the 27 level providing support, pushing the price back towards the ranges balance point around the 36 or 37 level. This is an area I want the price to at least partially rebalance to for a quick scalp, as there are two clear imbalance zones waiting to be filled. But for this to happen, I need to see momentum shifting back to the upside. I'm watching for indications of a reversal following this market maker dump model. Another thing to note here is that this downward movement has been clearly generating demand side liquidity. Now, all these highs here left behind as the market moves lower represent pockets of demand side liquidity. The idea here is that all these levels to the left of the chart will eventually be targeted with an upward move. But again, for that to happen, we need to have some sort of reversal. Now, as I mentioned earlier, I do have a bias to the upside, but I won't act on it until the market confirms it. That's the key difference between trading your assumptions and then trading the actual market behavior. In this setup, the market behavior appears as a sell rate with this recent low being taken. And now think of a sell rate as a mini stop hunt zone. This is typically a manipulative smart money move indicating a price reversal. At the same time, if this sell rate is genuine, we can apply it as a draw on liquidity, external to internal, using the already generated demand side liquidity levels that I mentioned earlier in favor of our bias. See guys, the market's recent downward move, which appeared really bearish if you remember on the surface, has actually set up potential for a strong move to the upside. I say this because the sell rate factor, which, and this is important, which marked the end of the market maker's dump model, was followed by bullish order flow. Separately here, for those new to day trading, now a market maker dump model is when market makers pump up the price of an asset and then suddenly sell a lot of it, causing the price to drop quickly. It's a way for them to make a profit, but it often leaves retail traders holding the bag, meaning they get stuck with losses as the price nosedives. Getting back to the trade, what I'm looking for here is for the price to like rebalance into this area and hopefully reach the ranges balance point, which is my predetermined profit target. And as you can see from the action, I ended up hitting that target. Remember guys, price movements in the market are not random or accidental. The fact is that if you want to make it as a trader, it's crucial to develop the skill of interpreting the market's subtle signals. Now, often the most important clues are right there in front of us. We just need to know what to look for and how to make sense of them. I think that this ability to read the market is what separates successful traders from the rest. And for those of you who would like to explore more similar trading techniques, don't forget to watch this video next. Alright gang, thanks for watching, and as always, hope to catch you all in the next one.